J-Dub need a fan, cause this flow's hot. Breaking my wrist, whip up the pot. I want some racks and I need me a lot. I'm going all in, I'm shooting my shot. Falling so hard like boys a bench. Disrespect me out here, shoot with a wrench. Your girl, she stunk, she got. What's up, though? So I'm back with another YouTube video. This is on Forex Basics number 2. Sorry that I did miss a week. My bad. I'm here now. My apologies. Go watch the previous video to see why. For those of you all that come to my YouTube channel for Forex, I am doing a weekly series where I'll be uploading a video every Wednesday at 5 p.m. Central Time. Just explaining simple Forex basics that I learned before I hopped into this. I've been doing this for about a month and a half. I'm currently a Platinum 150 on my way to P6. I am currently accepting members on my team. I only have 5 slots available. So if you want to unlock your path to financial freedom, hit my DM on Instagram. I'm only 15 doing this, bro. You could be doing the same thing too. Why watch me get rich? Come get rich with me. So yeah, so this video today is gonna be over what are pips. What are pips? Pips are very important. Pips is what makes you make money, and pips are what make you lose money. And I'm gonna hop into that in a few. And I'm gonna talk about how to count pips in different pairs. And just pretty much this video is gonna be about pips, and pips. This is what this week's video is gonna be about. So, what are pips? Pips are the way that the market is measured. It's the way that the market is measured. So, for example, you go to the Better for Trader app, and you should look to the far right-hand side. You should look to the far right-hand side. You see all of those little numbers right there. Those are pips. That's how the market is measured. Whether the market is going up, if it's going down, or moving sideways. You look at those numbers, that's the measurement of the market at that current time. Now, a pip stands for point in percentage. Write this down. Like I told you in the last video, bro. Note takers are money makers. Just like I told you in that last video. Note takers are money makers. So make sure you take notes by any means. So yeah, pip stands for point in percentage. And pips are the way that the market is measured. Make sure you write that down. Pause the video if you have to. And one more thing too. Pips times lot equals money. Remember, your pips and your lot size will determine how much money you make. Make sure you write down this formula right here too. And then another thing that I put in here too, like simple, small, basic baby stuff, that my mentee was confused on during his training. A EP, TP, and SL. So I'm gonna write this right here actually. So EP stands for entry point. EP is an entry point. So EP, entry point. EP is an entry point. So entry point is the price of where you're gonna hop into the market at, versus if it's a buy stop or a sell stop. That's gonna cause a entry point. So the market, let me just get a random common FX pair number. So the market can be at 1.4, let's see guys, 24. So it could be at 1.4. The market could be at 1.4. But my entry point, let's say my entry point is 1, 0, 2, 0, 0. So my entry point is at 20 pips above where the market is currently at. So I place that trade in with my stop loss and take profit. It's not gonna activate my trade instantly. It's gonna activate my trade once it hit this entry point. Once this entry point is hit, versus whether it taps this entry point and keeps going up, or if it taps the entry point and goes back down, the trade is going to still activate. That's what the entry point is for. Now, if you're doing a market execution takes no entry point. It has no entry point at all. You just have a stop loss and a take profit. So whatever the market is, it throws you inside that trade instantly, no matter what, where your market execute. But if you have an entry point, that's when you're doing a buy stop, sell limit, buy limit. That requires an entry point. And yeah, an entry point is basically the point of where you're gonna jump into the trade, pretty much. Now a TP means take profit. TP, take profit. So a TP is a take profit, and it's self-explanatory. So whether you're in a buy or a sell, so this right here. So say, hey, I got a 20 pip take profit. So once the market hits my take profit zone, it's gonna close the trade and take my profits. It's gonna close the trade and take my profits. Simple. I got my 20 pip take profit. Hey, I won the trade. It's gonna take my profits, close the trade. But that's what the take profit is. And a stop loss is literally the same thing. So say this is our entry point. We'll have a 20 pip stop loss. So let me write this right here. SL means stop loss. Remember that. Take notes on this. I know it's sideways, my bad. I'm so sorry. Oh, that's sloppy. Alright, so yeah, so say I got a 20 pip stop loss. So the market right here, this is my entry, you know, it hit my entry zone and say, hey, I'm in for a buy, but it reverses and hits my stop loss, which is right here, my 20 pip stop loss. Wow, when it hits your stop loss, it closes the trade instantly and you lose money. Simple. It does not ride out. It doesn't continue to ride out, make you lose more and more money. Like, no, as soon as it touches that, it closes it. It doesn't matter if it touches my stop loss and then shoots back up past my entry. It doesn't matter. It still closes the trade. I'm done with it. I lost money. Simple. And that's what a stop loss is. And then another tip for you new beginners that's looking to get into this: when you put a trade in, unless you're scalping, do not stare at it. Don't stare at it. You have a stop loss there for a reason. Oh, I don't want to lose money though. It's the foreign exchange market. We lose money. We win money. It's more important that your wins are bigger than your losses. The losses is what make us. It helps us learn. You're gonna lose some trades. Not everything is gonna be blue. Majority of your things might be blue, but not all of them is gonna be blue. You're gonna have some red days too. I've had red days too. I had a red day last night, but I don't let that stop me. That just motivates me and it keeps me going to let you know, hey, okay, so I don't need to do this next time. So when you put a trade in, close the app and go about your day. You have a stop loss and take profit for a reason. Unless you just on some weird stuff, you just market execute with no take profit and stop loss, but you have that there for a reason. So do not get emotional. Your trades are gonna be in the red. They're gonna be in the red. But you have that take profit and stop loss there for a reason. So always remember that. Always remember that. So boom, so now we got to the fun part. I like math. Let me just walk y'all through something real quick. Let me give y'all a little example on how to count pips with common FX pairs, okay? Now my mentees, if you're watching this video and then you haven't went through traders training yet, this is gonna help you out a lot. Watch this. All right, so we have a common FX pair. Say for example, we got USD CHF, right? So this is my entry point. I'm going in for a buy. Common FX pairs, every 10 points equals a pip. So, write this up here for y'all. So, 10 points equals 1 pip. This is what common FX pairs, by the way, okay? So, every 10 points equals a pip. So, this right here alone will be considered 6 pips. This is 6 pips, okay? So, now, so we have our common FX pair, which is USD CHF. We have our entry point right here. We're going there for a buy. So you should always have a 1 to 3 risk to reward ratio. Okay, let me write this in blue for you above here. Make sure you have a 1. Crap, this marker here. Make sure you have a 1 to 3 risk to reward ratio. That's just my personal advice to you. You don't have to do it. You can have a 1 to 1. You can have a 1 to 2. You can have a 2 to 1. That is all up to you. I recommend you have a 1 to 3 risk reward ratio. You will have to lose 3 trades to add up to your 1 win. That's my advice to y'all. So boom. So we have a pair. We got the entry. So now we have to convert pips to points. Convert pips to points. So if I'm doing a 1 to 3 risk to reward ratio, so let's say I got gonna make it easy. Let's say I got a 10 pip stop loss. I got a 10 pip stop loss for a 30 pip gain, right? So I'm gonna get this whole entire number over here, and I'm gonna show you an easy way to do this too, but I'm gonna show you the long way first. So we got 1.52 360, right? And remember, every 10 points equals a pip. So I said a 10 pip stop loss, right? So that would be 100 points. So we take away 100 from here. So boom, that's 6, that's 2, 2, 5, 1. I know that's sloppy, I'm gonna fix it. Okay, so our entry is here. Now our stop loss would be 1.52260. That's a 10 pip stop loss. A 10 pip stop loss. Now remember, 1 to 3 risk to reward ratio, okay? 1 to 3 risk to reward ratio. So now, since we're in a buy, when you're in a buy, you want the market to go up. You want the market to go up. If you're in a sell, you want the market to go down, okay? So for my 30 pip gain, we add 300 points, simple. So get our entry point right here. And of course you can just throw this into a calculator too. This will be our take profit. So let's run our take profit over here. TP 1.52960. And it's literally as simple as that. For common FX pairs, it is simple as that. I can't stress how easy this is right here. It is simple as that. You locate your entry, decide if it's going to be a buy or a sell. So now let's do the complete opposite. Let's say we're in for a sell, okay? So yeah, make sure you walk through with me with this right here. If you need to replay the video. So yeah, so now let's just say we're in a sell. You know, this is where it tends to get tricky for a certain amount of people. You know. So we're going in for a sell. Again, 1 to 3 risk to reward ratio. So hey, we're going in for a sell. We're going in for a sell. So doesn't that mean that the stop loss is going to be bigger than the entry? Yes. If you're in for a sell, stop loss is bigger than the entry. So I want a 10 pip stop loss. I add 100 points to here. So let's add 100 points. This would be my 10 pip stop loss right here. So let's write the stop loss. So SL is 1.52460. That's my 10 pip stop loss right there. So let's erase this right here. And like I said, complete opposites. Remember, we're in the market for a sell, so we want the market to go down. So for a 30 pip take profit, we subtract 300 points. So let's take away 300 points. This will be my 30 pip take profit right here. So take profit, gonna move that over here. CP 1.52060. It's simple as that. And now an easy way to catch on to this, say you want to convert the pips into points. Watch this right here. So if you noticed, it's only 2 numbers that change. These 2 numbers are the only 2 numbers that change, right? It's the only 2 numbers that change. This stays the same. The pipette is the number, that's the last number that's called the pipette. It stays the same. Unless you just get a number like 1400, you get 1.4000, you get, then that's when the pipette changes and all of that, of course, but we're not worried about that right now. So if you notice, this is what I tell my mentees. I tell them, hey, look, with common FX pairs, you go all the way back and you grab the first 2 numbers in front of the last number. So a 30 pip take profit for a sell. We literally disregard all of this. What's 36 minus 30? 6. And you drop everything, it goes down. That's one of the most easiest ways to keep up with counted pips for common FX pairs. This is how I keep up with mine. I don't convert my pips to points. I go all the way to the back to the pipette, get the first 2 numbers in front of that number, do my math, drop everything, goes down. Simple. And yeah, this is counting pips with common FX pairs, and just as a little bonus to help y'all with, you know, I didn't learn this until I actually got into Forex, but counting pips with US oil and gold, completely different. Completely different. I'm gonna show y'all too, by the way. So let me erase all of this right here. Make sure y'all got that in y'all notes if y'all need it. If not, make sure you rewind it. Sorry if I'm going too fast. I'm trying not to. We're gonna do US oil first. US oil. This is the most simple, most basic, most easiest thing. Like if you can't count pips with oil, I honestly don't know what to tell you. It's just no way possible that you can possibly get this wrong. It's just too easy, Dub Squad. It's too easy, man. Literally, this is what I tell my mentees. When you're counting pips with US oil, it's as simple as counting money. 1 pip equals 1 cent. 25 pips equals 25 cents. 75 pips equals 75 cents. So, you know, say my entry point was 60. 60, right? I want a 20 pip stop loss. I want a 20 pip stop loss with air for a sell. So, what's $60 plus 20 cents? 60.20. So the stop loss would be 60.20. Now let's see, 1 to 3, 20 times 3, 6. So I want a 60 pip take profit. How am I gonna do that? Bro, it's just like counting money. What's $60 minus 60 cents? So you literally just come over here, bro. You put this in your calculator too if you need to. 60, right? Minus 0.60. Borrow from over here. It's 9. So 1, drop a 0. 10 minus 6 equals 4. Okay, drop this 9 down. Boom. So for my 60 pip take profit, my answer is 59.40 for oil. And I mean, like Dub Squad, that's the most easiest common way to count pips with oil. I mean, I can't make that no much easier than I can. Like, I'm just sorry if you don't get that. With US oil, counting pips is like counting money. Simple. So yeah, let's move on to gold right here. Now, gold was tricky for me when I first started off. I'm not gonna lie to you. I had a little trouble with gold. It took me a minute. It took me a little minute. I got y'all. So my pair is gonna be gold. XAU USD. That's the full up name for gold, if you didn't know. So for every 10 pips equals 1 whole number. Every 10 pips equals 1 whole number, okay? Every 10 pips equals 1 whole number. That's the best way that I can put it. So it's not like common FX pairs for every 10 points equals a pip. Like, no, I just say whole number because you come all the way to the back and the first number increases. So for every 10 pips, you know, that's 1. 15 pips, 1.5. 36.7 pips, 3.67. 100 pips, 10. And this right here, this is where they try to get you. This could be tricky right here. This is what I told my mentees too. For every numbers that's 10 through 99, for every numbers that's 10 through 99, I don't care if it got 3 decimals behind it. Between the first and second number, a decimal needs to be put in right there. Simple. Simple. For 99 pips, it needs to be 9.9. Simple. Oh, J-Dub, what if it's 99.86? When you put that stop loss to take profit, bro, it should always be a decimal behind the first number. So it's gonna be 150.9.986. Okay? Always remember that, okay? For every numbers through 10 and 99, the decimal goes after the first number. I don't care. Always remember that. And this is why I put this example right here too, so y'all can latch that onto y'all memory. So I don't want y'all to get confused and say, okay, so but this is a decimal though. It's not a full whole number. So exactly where do I know? No, Dog Squad, no. Put that decimal after the 3. That's the number between 10 and 99. Simple. So yeah, I'm gonna take y'all through a couple examples right here. I know some of y'all got this question. What if it's just 1 pip? Trust me, when you trade in gold, you're not gonna put a 1 pip stop loss and take profit. So no. So yeah, so let's just say our EP is 1500. 1500, right? That's our EP, 1500, right? Okay, now with gold, you know, it's a little bit different. I don't trade gold like that. Only time that I trade gold is when I copy and paste. I don't personally go to my harmonic and mark up gold. I don't do that. But we're still gonna do the 1 to 3 risk to reward ratio. So I'm gonna do we're gonna put it in for a buy. I'll do a sell too, just to help y'all out. Risk to reward ratio. So say I want a 30 pip take profit, right? Of course. So remember, for every 10 pips, that's one whole number. So what's 1500 plus 3? 1503. So take profit is gonna be 1503. You get it? You literally just came back here and you added 3. Oh, Gino. Okay, what if I got a 30 pip stop loss? What if I take away 3? Again, you just come here, take away 3. Simple. 1497. That would be a 30 pip stop loss. Now this is a 1-to-1 risk to reward ratio. I don't recommend you do a 1-to-1. I recommend you do a 1 to 2 at bare minimum. At least, please do a 1 to 2. Please, Dog Squad. Please, I'm begging y'all, do the 1 to 2. But if you want to do the 1-to-1, that's cool. But we're gonna disregard this though. You know, we're doing the 1 to 3. So I already got my take profit. I need my stop loss. So I will take away 10 pips. What's 1500 minus 1? 1499. That's gonna be my stop loss. 1499. And that's how you count pips when it comes to gold. So remember, for every 10 pips, that equals one whole number. Every 10 pips equals one whole number. Always remember that, Dog Squad. So yeah, these are my answers right here. I did a 30 pip take profit, 10 pip stop loss. We're gonna do the same thing for a sell. You know, it's the same thing, just reversed. Then we're gonna do it so y'all can visualize it too. So yeah, so boom, same thing. Every 10 pips equals one whole number. 1 to 3 risk to reward ratio. Remember, if I'm in a sell, I want the market to go down, so my take profit is gonna be lower than my entry. Every 10 pips equals one whole number. Okay, so we get our whole number right here, 1500, right? All right, so 1500 minus 3, that's 1497. That's gonna be a 30 pip take profit. So 1497. So TP is gonna be 1497. Okay. And then it's the same thing when it comes down to the stop loss. Remember, when we're in a sell, we want the market to go down. So the stop loss is gonna be higher than our entry. So what's 1500 plus 1? 1501. So our stop loss is going to be 1501. Simple. And I mean, this is pips. You know, this whole video is about pips. This is the most simplest, most easiest way that I can put it. So y'all, Dog Squad, if you have any questions, feel free to DM me on Instagram. I'm currently accepting people into my team. I have 5 slots left, so claim them while they last. You know, hopefully I may have a slot open by the time you get to me. If you're looking at this a year from now, I highly doubt that the 5 slots are still open.
So yeah, but this is counted pips right here. You know, if you're still lost or confused or anything, like I said, feel free to send me a DM on Instagram. Replay the video back. But this is pips right here. You know, pips times lot size equals money. You know, I taught y'all what an entry point was. I taught you what a take profit and stop loss was. I taught you how to count pips with common FX pairs, how to count pips with US oil, how to count pips with gold. I told you what PIP stands for. I gave you the definition of a PIP. And that's it for this week's video. Make sure y'all tune back in next Wednesday at 5 p.m. Central Dub Squad. Thank y'all so much for the support. I will see y'all later.